I want to do something just a little different today, and that is I want to talk to you about return on invested capital and why it is such a critical matter with regard to companies like Tesla, especially growth companies, in evaluating them for their future potential, not just earnings, but how much money they're going to throw our way. Okay. So if this is interesting to you, please hit like, and I'll do more of these short tutorials in the future about various aspects that underpin your and my investment in Tesla. Maybe it's the reason you invested in Tesla and you didn't even know it. Hit like, hit subscribe, hit notify. Of course, I still have one more tonight. I will definitely do the financial planning, where we talk about what's coming up this next week, which includes, of course, the all of the inflation information, which will be coming Wednesday and Thursday. But I'll talk about that in my video that will come out in a few hours. But right now, hit and then of course join Patreon if that would make you happy to make me happy. And maybe you'd like to see some of the other short things I'm doing on Patreon that are only going to be showing on Patreon. All right, let me get into it here. All right, so return on invested capital. So let me go back to my life as a distributor, manufacturer, retailer, advertising agency. I've had all these different businesses, including the current business, even the YouTube channel. There is a return on invested capital, even in a YouTube business. But let me take a more standard thing like a factory. I was constantly short of cash, even though we were doing $5.5 million a year in business. It never seemed to be enough money to do all the things that we wanted to do. And so you have certain things that you have to do. You have to, hire employees. You have to, make decisions with regard to advertising and different kinds of marketing, improving products, hiring salespeople, all the rest. You have all these decisions you're making about where you're going to allocate capital and how much you're going to spend for various kinds of expenses, how you're going to lower your cost of goods, how you're going to make decisions with regard to pricing that will potentially increase your margins. I mean, there's a list of things that you're constantly having to think about. But one of those is, it'd be so great if I could lower my costs by investing in, let's say, some automation, maybe in an Optimus robot. Okay. So I take a look at the situation and I say, okay, if I buy an Optimus robot, let's say I can buy one for $100,000, what exactly am I going to get from that purchase? Now, a lot of people who don't go into these kind of details, they don't get their CPA like Shayla Chamberlain and, making money out of thin air. You can read our book. Anyway, a lot of folks who don't really get into the nitty gritty of it, they take a look and they go, I can, this will really save me money. It's kind of a top of the mind thing. And sure, when you're a business owner, a lot of time there's a lot of gut going on and you do need to rely on your gut a lot of the times, but it's not that hard to figure out. So you're looking at this product, let's say an Optimus. How is that going to save me money? Well, number one, it's going to eliminate some overhead that I currently have in terms of labor. So there's a cost savings. Now that can be looked at as a return on invested capital, but there may also be that it's going to allow me to do more of what I do because maybe I'm now limited in the number of units, in my case, as many of you know, water bottles, the number of water bottles that I can produce in a year is now limited by the fact that I'm using hand labor in this particular space. And if I bring in an Optimus and it can do it a little faster, the other equipment that I have can go faster if only that aspect of the business could go faster. So the robot could cause me, the automation could cause me to do more overall business. So I invest that $100,000 and I can look at what are my savings and also what is it going to do for me in terms of increasing my overall business. It might also, by virtue of lowering my cost, if I lower my cost of goods sold, I may be able to lower my cost of the sell when I'm charging people for the bottle. That might give me a competitive advantage, which might increase my TAM, might increase my overall percentage of my market share, and increase my sales that way. So there's a lot of different ways that Optimus could potentially increase my total return and therefore my total cash flow, and what they call free cash flow, but there's even a better term, and this is extra. It's not even called extra. There's a technical word for it, and I'm forgetting right now, but it's kind of like this is over and above your expectations because you've made this decision. So we look at Tesla. Now, in the real world, kind of the average company out there, big companies on the Fortune 500 or whatever, the average company out there usually gets a return on investment capital of around 7, 10, 13%. That would be kind of an average. And some industries are very capital intensive, like the automobile industry is very capital intensive. So for them to get 10 or 12 or 13, 14, 15% return on invested capital would be fantastic. Their numbers are usually going to be lower than that. Other industries like software businesses and people that don't have to invest nearly as much, their return on invested capital might be much, much higher. Sometimes it could even get into the 30, 35% range. That would be very, very high. Anything approaching 30% is considered to be just absolutely amazing. And contemplate, think about what you're doing as an automotive company. You're building this plant, okay? You're starting years ahead of when you're actually going to make the product, designing, developing, making the plant, designing and developing the lines, the layout, how everything's going to work. You're bringing in massive tools. You're making dies. You're now bringing in employees way before your first product comes out, who are coming in and learning how to run everything and how to set everything up. I mean, you have all this capital that's going into the production of the very first unit. And of course, it may not sell, okay? And it may not sell well, or it may not be as competitive as you want it to be. Your margins might be lower than you were hoping because it's not as competitive, because you just don't know until you make the first product and you make 10 and 20 and 100 and 1,000 of them. You don't know what the results are going to be. So the return on invested capital also has to do with your success in how you designed and planned, and how good you knew the market, and how well you anticipated what you would be able to sell something for, and how much that would actually give you in terms of margins. And also your costs, maybe your costs changed during that time. So many things can go wrong and only a few things can go right. Well, all right, so you have this range, let's say from 5 or 7, 10%. Maybe most automotive companies would be somewhere in that 10%, 12% range. You might have food companies that might be more like 14. And then you've got the, like I said, the software companies and people that are in the internet, like my YouTube channel. I have very little invested capital. I already owned the laptop. I did not rent or buy additional space. I took some coursework in order to learn how to do it. So you can see there's very little invested capital. So if there's any return at all, then it's going to have a very high ROC. Well, one of the highest ROCs in the world, and they're not always at this number, but right now, or the last number I can find on Apple Computer is 50%. Or 50, the ratio. I'm forgetting what there's a ratio, it's a formula, so it's a 50. So compared to like an auto company at 10 or 12 and a food company at 20 or 15, or Apple's coming in at 50. So it's a much, much better return on capital. And that would also indicate that future cash flows, assuming they continue to be able to invest their money that well, future cash flows are going to be amazing compared to other companies, compared to all other companies, but also you can look at it compared to in their industry. Well, Tesla is sitting, are you ready? So right now, at the end of 2022, the last number I could find, Tesla is a manufacturing company who makes automobiles, and you would think they'd be down around 12, 14%, right? No, they're at 29%. And every person that I could find that had a comment on Tesla's ROIC was saying, and it's likely to increase. Now, how does that even compute? All right, how does it compute that Tesla should be down around 12, 14%? But no, their numbers are higher than internet companies. Their numbers are now approaching Apple numbers. How does that work when they are investing so much money in plant equipment, big gigapresses and everything else? It's because first principles thinking. It's because Elon looks at it that way, just like I did. I looked at it first principles thinking, not because I was smart. I looked at it principles thinking because I was broke, because I didn't have enough money to do all the things I wanted to do. I never bought a piece of equipment or machinery for my factory that wasn't going to pay off in 1 year. What was my pay? And I was looking at just the payoff and the savings with regard to employees or whatever else, a better piece of equipment compared to this piece of equipment, whatever it might be, a new mold that would save me money because it would not break down as often, whatever it might be. I never made an expenditure unless it paid off in 1 year. Well, that's not even normal. Trust me. Lots of times companies buy pieces of equipment that they expect to take 2, 3, or 4 years before they pay off. One other way you can look at this is you look at some of these announcements by these battery companies and these automotive companies in terms of what they're going to spend on these big factories that they're building. And they're saying, okay, we're going to spend $5 billion and out of that factory, we're going to make 400,000 cars, a year. And you look at Tesla, and Tesla says, we're going to spend $2 billion and we're going to make 500,000 cars, or we're going to spend $5 billion, but we're going to make 2 million cars out of that factory. And the batteries are the same thing. They're going to put the battery line within that same factory that they're spending all the money to build to make cars. They're just throwing the batteries in for free, basically, in that same facility. No, of course, that's not true. You got to take the slice that they're going to use in the factory. You've got R&D. All of these things have to go into that return on invested capital. But Tesla has been growing like this. 3 years ago, of course, they had no returns at all. And they had returns once they had returns. But even when you can, there's a way you can do it, even when you're not earning money, where you can intimate or suggest what the return on invested capital is going to look like. You can project it into the future. The projections are that Tesla's 29% is low compared to what it's going to be in the future. When you take a look at what they're doing, their return on invested capital is going to continue to climb and is very likely to go into the 40 range, which would put it along with internet companies and software businesses. So is Tesla an automotive company, or is Tesla a tech company? You tell me. So this is one of the reasons. And I think one of the reasons that the PE is so high. And I think that maybe there's people out there that get it. Some of them have done the math. I mean, Morgan Stanley and these other companies, they write articles. I read some of the articles that Morgan Stanley puts out on ROIC. They get it. They understand how important ROIC is in terms of being able to project out what the future growth looks like and what the future returns are going to be based on that growth. They have the formulas. They have the folks that can do that. Well, so some of those people are doing this already, and maybe that's why the options trading is also so high in Tesla, is because there's smart people out there that are actually looking at those numbers. And then there's a bunch of other people that have the gut that are kind of seeing those headlines and going, Ford is spending how much to make how many cars? And Tesla's spending how much to make how many cars? And oh, by the way, Tesla's making these margins and these other companies are making those margins. No, this is a tech company that happens to be making cars. And this ROIC is going nowhere but up. If this was at all helpful to you, ask your questions in the comments below. Please ask your questions if some of that doesn't make sense. Please let me know what did make sense. Please let me know if you liked it. That would be very, very helpful. Hit notify, if you want to be notified about, tomorrow morning, of course, on Monday morning, we start the week right after the bell. We start giving you whatever news there was overnight, as well as what we think might be happening during the day based on the first 10 to 15 minutes of the trading day. So a lot of people seem to like that show. And so that'll be starting again tomorrow morning. Hit notify if you want to be reminded. And if you'd like to see it right away, like right as soon as I get it done, usually I post it between 7:10 and 7:15 California time. So, 10 to 10:15 in New York. I try to get up at that time, like within 40 minutes of the opening bell. It takes me about 20 to 25 minutes to produce it. But from the time I hit the end button to the time that I can get it up and get it out to you guys, it takes 20 to 25 minutes, depending on how slow the internet is and all those kind of things. Anyway, and then Patreon, I am starting to do some small stuff up on Patreon that you won't find anywhere else. And so maybe you'd like to join. It's 7 days. First 7 days is free. You can try it out. And then after that, it's only $5 a month. And I think you'll get $5 a month worth of value out of it as I start to do some of this. I think you'll get more than that, of course, but at least $5 worth of value out of being part of Patreon. And that'll be, of course, in the information below. All right. So that's for now. That's all I got for you. And it's been great talking to you.